Hello traders, welcome back to Trading Life Masters. This is Zicheng here, and in this video, I'll be going through inducements. It is one of the famous ICT concepts and definitely one of the must learn. Before we start, please like, share and subscribe so that you wouldn't miss out on the latest videos. Hope you enjoy. Before we go on to the charts, we first have to understand what is inducements. Sounds like a very fancy word, am I right? But it's actually very simple. It simply means trap. So why do we call it a trap? Because inducements is what banks or the institutions use to induce or to trap you buying or to trap you selling. Now I'll be using some diagrams to teach you what inducement is. So we have a bullish trend here and we have a bearish trend. So let's go through the bullish trend first. We have a strong up move up and a retracement, push up again, retracement again. Now the next push up, it was not able to break this high, and many traders would think that price could potentially reverse because it's forming a double top and price starting to reverse back down, and that is when traders think that the trend is going to reverse. So they proceed to take some sells here, especially they see a market structure shift over here. They think it's a break of structure or a change in trend. They decide to take the sell and have their target down here. What happens is price decides to reverse back up and touch their stop loss. So this is where we call inducements. This is where inducement occurs. This is why it's very important to follow the overall order flow or the overall trend. Next up, we are going to look at the bearish trend example. So we have a down move, a retracement, a down move once again, a retracement, and everyone is expecting it to make a new lower low, am I right? But price turns out to hit this area, forming a double bottom. That is when traders think that it will potentially reverse and change to a bullish trend, but they are waiting. So now they have seen a market structure shift over here, or break of structure, or a change in trend. They think that the trend is going to reverse, so they decide to place a buy, have their stop loss below and have their target. And what happened is it decides to come back down. So this is where we call inducements as well. So this is what the banks usually love to do. They love to trap the traders, the retail traders, in their direction, and they catch their stop loss and proceed with the real move. So this is inducements. So I hope all of you have understood the basic diagrams of how inducements is, because you need to understand this before we proceed to the next phase, which is going to the live charts. Let's have a look at some live chart example here. This is a 1 minute Euro USD chart. So we can clearly see it's more like a bearish order flow right now. Yes, bearish order flow. So it's better for us to look for some sells. But what happened here? Let's see. So we can see that there is a break of structure over here. Am I right? There's a break of structure here, and many traders will think that the trend is going to reverse into a bullish order flow. But what happened? What happened was, look at this part over here. It turns out to be an inducement, because why? Let's say if traders took a long here, place their stop loss below, and what happened? Their stop loss will be hit. So that is why it's very important to follow the trend or follow the order flow. So this is what we can call inducements, because you have been trapped to take the buys, but the real move is a down move. Let's have a look at another example. So in this case, for GBP JPY 1 minute here, we have a bullish order flow. And now look, price came down and we're expecting a new higher high, am I right? But what happened was price did not make a new higher high. In fact, it formed something like a triple top. Price has been rejected 3 times in this area. Therefore, many traders think that it will be a shift in trend. It will change into a bearish trend. But what happened? Look, we have a break of structure here, and many traders, if they don't know about inducements, they'll proceed to take a sell here, short, stop loss, and let's say a 1 to 2 risk to reward about here. Look what happened to price. Price came down, induced the sellers, trapped the sellers, and pushed the price all the way up. So this is what we call inducements. This is why make sure every time you trade, you follow the overall trend or you follow the order flow, so that you wouldn't get trapped or get induced by the banks or the institutions. That is it for this video. I hope you have now understood what inducement is and how to avoid false breakouts. If you have any questions, feel free to comment down below. Besides that, I have daily live streams, so if you are interested, head over to trading.live to join me every day. Once again, I hope you have liked, shared and subscribed. Thanks for watching till the end. See you in the next video.